But here's the burning question. Which of these stocks holds more potential? 2025? Two high-growth stocks are stealing the spotlight, Palantir and SoFi Technologies. One has skyrocketed 366% in the past year, while the other is redefining personal finance with 61% growth. Could one be the next big winner in your portfolio? Or are there hidden risks that could spell trouble? So, are you ready to uncover the surprising details that Wall Street isn't telling you? The S&P 500 appears to be staging a solid rally after a weak performance last week. However, today we want to focus on two high-growth stocks. Palantir, SoFi Technologies. Palantir has experienced a parabolic rise of 366% over the past 12 months, while SoFi is up an impressive 61%. Which stock holds more potential for growth in 2025? Review of Palantir. Palantir specializes in building software platforms for integrating, analyzing, and visualizing large datasets, aiding organizations in making data-driven decisions. The tools are widely used across industries such as government, healthcare, and finance for tasks like intelligence analysis and supply chain optimization. Overview of SoFi Technologies. SoFi Technologies, on the other hand, operates a digital platform focused on personal finance. Historical performance. Over the past year, both companies have outperformed the S&P 500, with Palantir showcasing strong growth, while SoFi has shown more modest growth of 3%. Palantir currently trades near its all-time high with an inflated forward price to earnings, PE ratio of 213. Meanwhile, SoFi has a forward PE of 119, still high but significantly lower than Palantir's. Both companies have mixed analyst ratings, with Palantir receiving hold recommendations from Wall Street and SoFi garnering buy ratings in some instances. Earnings growth. Palantir forecasts double-digit growth in earnings per share, EPS, for the next 4 quarters, maintaining a 100% track record of meeting or beating analyst estimates. Palantir revenue grew 25% year over year, significantly outpacing its sector average of 4.4%. Earnings per share are expected to grow 28% annually over the next 3-5 years. Year-over-year revenue growth stands at 32%, outshining its sector's 4.5% average. EBITDA growth is an impressive 86%, far surpassing the sector median of 9.2%. Institutional ownership. Institutional investors have shown bullish activity for both companies. Palantir. Institutional ownership stands at 46%, with substantial net buying activity over the past year. Institutional ownership is at 38%, also showing significant net buying. Insiders have been selling shares, with $1.41 billion sold in Q4 alone, coinciding with rising share prices. Insider sales have also been substantial, although at a smaller scale compared to Palantir. Cash flow and debt. Palantir. Positive free cash flow and a strong balance sheet with net debt near zero. Free cash flow has been negative but is expected to turn positive in the next 12 months. The balance sheet shows decent strength, although not as robust as Palantir's. Valuation model. Palantir. Using a DCF model with a 35% growth rate, its intrinsic value is estimated at $59, indicating a 28% downside from current levels. A similar model estimates its intrinsic value at $18, suggesting a potential upside of 15%. Key considerations. Palantir POS. Strong presence in government contracts, expertise in AI and big data, and a foothold in growing markets like defense and AI. FIPOP. Rapid growth in digital banking and financial services, robust membership expansion, and diversified revenue streams. Conclusion. Palantir. Attractive for investors betting on long-term growth in AI, defense, and big data, but its high valuation and reliance on government contracts pose risks. Appeals to those optimistic about fintech disruption and personal finance innovation, with a more reasonable valuation, but regulatory and market risks to consider. We recommend to buy on SoFi at $14, with a target to sell at $16.50. But if you currently hold PLTR in your portfolio, we suggest to sell at $70. Ultimately, the choice depends on your investment horizon, risk tolerance, and belief in the growth potential of these sectors. Let us know your thoughts in the comments below. And don't forget to sign up for our free weekly newsletter for more insights and stock recommendations. Find recommended stocks every day at m-am.com.